So GDP came out today and it came in much higher than expected. Big shocker there. Consumer spending rose more than the analysts expected. Exports declined more than they expected. And imports fell more than they expected. Again, shockers all the way around because you all know how I feel about experts in this. And as you've heard me say before, anything that has a pattern, if it's monthly, annually, weekly, whatever, you don't look at one of those months. You look at trends. And my point is right up here. If you look at the trend, just draw a straight line through it. Okay, you have 1 month that's a little bit low, 1 month that's a little bit high, and basically this quarter was very similar to a year ago at the same quarter. Does it mean anything? Absolutely not. What it means is that the total fear about what's going on with the tariffs was absolutely unfounded. And again, this is not a Trump thing. This is not a political thing. This is a financial thing. And I'm just trying to show everybody you got to understand what the differences are between tariffs and inflation and things that are actually affecting the economy and things that aren't. Really, the stock market doesn't think what the GDP is doing has any effect on anything. It's doing exactly what I'm saying. Look at 3 or 4 quarters in a row, average them, and see what that actual trend over the long period is actually telling you, which is absolutely nothing. It just means that the economy is continuing to roll on. It's not spectacular. It's not falling off the planet, but it's just moving along. I'm going to continue to say this till everybody understands it. The difference between the economy and the stock market is vast. So don't think about the fact that the stock market's at all-time highs and think that has anything to do with the economy. So keep focusing on the things I'm telling you, which is take a look at the long end of the curve as far as bonds and see how that goes versus what's happening with Powell this afternoon. And what I've been saying all along, and I'm going to continue to say this, until the long-term rates come down without Powell lowering them, we've got a problem. Because if he lowers them before they start coming down, it's going to be a bigger issue. Just like last fall, when he lowered them 1%, the bond yields went up 1%. If he does it again before they tell him, before the bond market actually says we're ready, it's a problem. So stick with your long-term financial plan. Talk to your advisor. Make sure you're not over your skis and you haven't grown too much. And you might have too much extended out there because there's always a possibility of pullback. Dickie out.